Hi, good afternoon everyone. My name is Ram Dhija. Welcome to my channel. Today is 26th of August and Tuesday, Sensex expiry with truncated week, and tomorrow is a holiday. And the market is weak, decisively weak. There is no two ways about it. It was clear on Friday itself that the market has broken down. Now, what happened on Monday was that there was a overnight news from the Fed that the rates might get cut in US, and the Fed chair sounded very dovish in his speech in Jackson Hole. But what that happened was that because all the world markets went up, US markets went up, etc. Our markets on Monday went up, but slightly. And the kind of reaction that should have been expected was not there. There was some little bit of short covering, but that entire thing got wiped out within one day. And today, the real effect is coming in, which was there on Friday. So market today again has fallen, and today it has again fallen quite a lot. As we speak, we are at about 24,780 odd, with some time to go for the closing. But make no mistake, this is a decisive down move that has happened in the market. And as long as I've maintained, I had done a video also over it over the weekend, where I had said that next week, can it be a week of weakness in the market? Can the market actually break below 24,000? 24,000. We are at 24,700. So I had said, can we break below 24,000? The reason for saying that was that the last low that we made was at 24,300, and then we rallied up to about 25,100, 200 odd levels, but we never ever cleared 25,600, which was the previous high. So if we are not able to clear that, then we have definitely started to make lower low, lower high pattern. In that lower low, lower high pattern, the last low was 24,300. If that breaks, the next low is 23,900, which is below 24,000. And that is why I was saying that if this pattern doesn't hold, we might look at a deeper cut, which is about 700-800 points from here, which could be about 3 to 4% on Nifty, which is 3 to 4% doesn't sound much, but 800 points on Nifty breaking 24,000 is a big deal in my opinion. So I'll take you through what is in store in today's video. We'll do a good deep dive analysis. So let's start with the Nifty chart. This is the Nifty chart. We opened gap down today, and from there it was a sharp cut. All the things were finished by 9:45. All the puts were taken out of the system, and from there we have been in this range. And with just some more time to go, maybe we'll see a down move or whatever. But the day is washed off. It's completely washed off. And if you look at, this is the Nifty daily chart. Now what has happened in the daily chart is that you can see 1, 2, 3, 4 red candles now, and this gap up that was created because of the GST news coming in on 18th August, when the markets opened after the 15th August announcement. It was a gap up, but that we are now at a level which is lower than that day. So you can imagine that this news has completely been discounted, and if we go to about 24,600 odd, then that news will completely be discounted by the markets, and markets are not getting enthused because of that. So let's see whether this gap gets filled up. And this is the last low that I'm talking about, 24,300, in which you can see in the dotted line over here. If this goes, then we are looking at this low, which was 23,900. I sincerely hope that this low doesn't go, because if this goes, then it's like deep trouble. Though on the flip side, the good thing is going to be that it's going to open up a lot of buying opportunities for everyone, but short-term pain will be there. So right now we are still good, about 800 points away from that. Now let us look at, this is the Hanekani chart of Nifty. It basically gives a smoother pattern to see things. It's a weekly chart. So if you look at the weekly chart, we were in a down move. Last week was green. This week is still showing green on Hanekani chart, but it probably can be a counter move. Like over here, you saw in December, there was some relief rally, and after that the big down move came. So this could be a small relief rally which we are witnessing right now before the big down move is quite possible. But this Hanekani chart gives you that after 1, 2, 3, 4, 5, 6 weeks we broke that downward pattern last week, but this week is not looking good as of now. This is the Banknifty chart on a daily basis. Banknifty is looking slightly more weaker now, because it had been making new highs every day, but now it is kind of weaker, so it has fallen quite a lot. Now we are at 54,300 odd. It's a critical level. Let's see if it holds. If it doesn't hold, then we are looking at going down further, and the high at 57,700 seems like very far away. So banking is also not looking very strong. This is the open interest of Nifty. The OI change today was significant. 3 crore calls have been added and 90 lakh puts have been wound down. So puts are getting even wound down, which is not a good sign, okay, in my opinion. And if you look at the total open interest, that will also not be good. It will be 0.61. Yeah, so 20 crore calls versus 12 crore puts. Now, see, this can change on Thursday. Okay, if 8 crore puts get added to the system, then we can stay there where we are, or we can be slightly up. But if this 20 crore calls goes to 30 crore calls, okay, then we are looking at a big down move on coming on Thursday. So we will have to see how the world market reacts, how our Indian markets behave on Thursday. But Thursday expiry is going to be, it could be a waterfall expiry, considering that there are almost 1.5 times of calls rather than puts in the system. And actually, if you look at this FII short positions, FIIs are 87% short. They have about 2 lakh 1,479 short contracts versus just 31,000 long contracts. So they are fully short, and retail is fully long, okay, with 70% long. So it's like retail is trying to fight the FIIs. DIs are also long at 63%, but retail is 70% long. Looking at the premium today, so there was some melt in the premium. We opened at 153 straddle. Right now we are at 125. So there's been some melt. For 2 days, 125 is less, but it's okay. What to do? This is the new regime that is there. So some decay has come in the straddle premium today, but that came in after the wild move in the morning when all the puts were taken out and even the calls were taken out. The calls also rose. Puts were going down and far OTM calls were also going up. So that has also got to do something with the VIX going up. VIX went up by 6% today. So all these funny things do happen. And also a lot of people buy these far OTM calls to get more leverage in the system. Now let us look at how much the indices are down from their tops. Now all the indices are below 5%. So earlier we were seeing Nifty, Bank, FinNifty, etc. were 2%, 3%. They were under 5% from their 52-week high. Now everything is above minus 5%. But FinNifty and Banknifty still are the least at minus 5 and minus 5.44%. Nifty is at minus 5.72. Rest all the sectors are weaker. Mid cap is starting to crack. It's at minus 6 now. Then if you look at autos, which has been doing really well, is minus 8 now. Pharma is minus 8. Small cap is almost minus 10 now. Commodities is minus 11.8. Nifty next is now at minus 14%. That's huge. FMCG is at minus 15. So nothing is getting spared. Public sector enterprise at down minus 20. Alpha continues to bleed at minus 20. Realty is at minus 21. One thing that has gone up is IT. So IT was minus 25 a couple of weeks back. Now it is at minus 21. So IT has been doing slightly okay in this falling market. If you look at, this is the sectoral performance for today, how the sectors have performed. So pharma is down minus 1.6, small cap has taken a beating at minus 1.6, metal minus 1.4, financial services minus 1.2, banks minus 1. IT is still holding at minus 0.5. The sectors which led today, FMCG was up, okay, and MNCs was up 0.5, and India VIX has been up. So these are the three things which have been up. This is the FII selling chart. As you can see, FIIs come every day, they sell. Now August again they have sold 28,000 crores. Yesterday they sold 2,500 crores. So they have been selling, and DIs have been buying almost 70,000 crores they have bought, but that's got no impact now because the FII selling is so relentless. It just doesn't stop. Now let us look at the global cues because lot is dependent on what is happening around the globe. So US 30 years is up. Now this is very strange because the Fed has announced that they are going to cut rates, but the 30-year is up. So this is not good news. It's at 4.9. US 10-year is at 4.3, and that's okay, still lower than 4.5, but it's also gone up a bit. S&P VIX is up, so even US markets are not very comfortable right now, though they are making all-time highs every day. But the futures as we speak is slightly down. US dollar index at 98, which is okay. Brent oil is slightly up from 65, it's at 67 now, but still okay. USD INR is at 87.6, it's okay, but almost touching 88 now, which is not so great. Gold making an all-time high. If this is my hypothesis, that if the money printing doesn't stop, and there is no sign that it's going to stop, and with the US Fed cutting rates and money printing becoming more liberal, gold perhaps will continue to do well. I was just listening to some podcast today, and they were predicting that gold can actually touch 3,800 to 4,000 in USD. It's possible, quite possible, because gold as a class is basically, it tells you where your fiat currency is, and dollar is losing its value. And along with the dollar, the rupee also weakens, which is quite strange, because the other currencies like euro and other world currencies are not weakened so much. It's the dollar index has actually gone down. The yen hasn't weakened so much, but our currency also weakens along with the dollar. So more dollar printing results in gold value going up further, and because we are also depreciating along with the dollar, it goes up in INR as well. So gold right now is at 3,400 in USD per troy ounce. It can go to 3,800, 4,000. We don't know how the situation pans out in US, if there's a recession or if there is the huge debt crisis that they are facing. So gold, there is a reason why gold has been going up. So I've been maintaining that everyone should have an allocation in gold. 10% is a good allocation. For me personally, I haven't added anything in the last 1.5 years. Still, it continues to go up. From my 8% allocation, now it is 11%, and I haven't added anything. So gold should be there as a part of your portfolio. I've been maintaining that. And also at the same time, I would also maintain that whenever markets are correcting, it's a good time for you to build your portfolio, strong portfolios. Think which are the sectors you're not been able to buy, which are the market caps you're not been able to buy. Have those market caps actually come at a level where you would want to buy. Please don't go by buying individual shares or sectoral funds or things like that. Buy good market weighted, either ETFs, mutual funds. They're beautiful mutual funds that are there. Or if you are a little bit more knowledgeable, then you can look at factor funds like momentum, alpha, quality, value, etc. So there's a whole host of mutual funds that you can look at and build your portfolio. You can look at flexi caps if nothing else makes sense to you. So they're beautiful products, and they really, you can get them at a discount when the markets are going down. So do consider investing for a strong portfolio. I help people build their portfolio. So if anyone is interested, they can fill up the Google form for mutual fund portfolio construction, and I will help you build a strong portfolio. If you want your portfolio checked, you can reach out to me. There are a lot of people who reach out to me, and I like talking to people. I hear their how they have been going about making their mutual fund, and then we have a good chat, and I tell them that this is another way to look at your portfolio, and hopefully they also appreciate that. So if anyone is interested, they can fill up the form and just tell what you want to do, whether you want to construct a mutual fund portfolio or get your mutual fund portfolio evaluated. I'll do that. Both are free of cost. So that's it from me now. The market is weak. It's not good. It's breaking now 24,700 as we speak. It's possibly going to end somewhere over there today. It's not good. I don't know what is the issue with the markets. Is it just normal correction that is happening? My sense is that it has got something to do with the US tariffs and the situation not so conducive between US and us, and that is where the problem is stemming from, because there is a big overhang that right now a lot of things are exempted from tariffs, like IT is exempted, pharma is exempted, autos is exempted. What if tomorrow something comes under the tariff ambit? That I think could be one worry for the market. So I'm not sure, but that possibly is one reason. FIIs are continuously selling. I don't know whether it's just a valuation issue or something else, but there's some problem in the market, and hopefully it should get resolved. But our job is not to dwell too deep into the macros, but our job as an investor is to ensure that when the markets are down, we build our portfolio. So that is what you should do, and that is how you should take this opportunity. So that's it from me now. If you like my content, please do subscribe to the channel. Please do like, share, comment, and leave your comments. I like reading them. If you want to join my WhatsApp group, again, you can just fill up the Google form right over there. I want to join your WhatsApp group. I have a WhatsApp group in which I share knowledge also. So that's it from me now. I hope you enjoyed this video. Take care. Bye bye.